Hi everyone, welcome to this live show. I think some of you have already joined us. Thanks for being early. Good morning. All right, good morning. So in this live show, guys, those of you who have just joined us early, welcome. All right, and we'll be talking about something really different. Right, it'll be something different from our usual Ask Me Any Stock session. Today, I have a very special guest right here today, Marcus Ng from Socgen. Maybe Marcus, just say hi to everyone.
Hi everyone.
Yeah, okay. So today, guys, we'll be talking about this thing called the Magnificent 7 US stocks, all right? And essentially how any of you could actually take a position in, any of these stocks using what we call DLCs, right? Daily Leverage Certificates, right? So just do us a favor, guys. Hopefully you can help us to like and share, all right? Just type like and share in the chat, all right? Let me see. We have good morning over here. Hi, John. Theo, good morning as well. Hi, Foon, good morning. Carol, good morning. Nelson, good morning. Thank you so much for being early. All right, help us to like and share, guys. Help us to like and share before we get started today. All right, and I'll share a little bit more on what is happening today, especially if you're on the US market, right? Help us to like and share. I think there should be a like and share button as well. Good morning. We have Chi Sing as well. Hi, good morning, Chi Sing. Good to see you here as well. Awesome. Okay, so very simple, guys. In today's session, something different, all right? We'll not just be covering any US stocks or any Singapore stocks in our usual, like Ask Me Any stock session that we have on Friday, right? Today, Marcus will be here with us, right? And that's where Marcus will share his expertise on this product called DLCs, right? DLC. So essentially, there are 7 magnificent stocks, right? They call it the M7 stocks in the US. So what are these M7 stocks? Why is this name called M7? Well, essentially, the Magnificent 7 stocks are some of the top technology companies in the US, right? And what are these M7 stocks? Well, they are like, Apple, we have like Amazon, all right? We have Alphabet, all right? Alphabet as well. We have also Meta Platforms. We have also Microsoft, right? NVDA, and even Tesla, all right? So these are the 7 M7 stocks, which are pretty much leaders in their space, in the AI space, in the cloud computing space, in the electric vehicle space, even in the social media space as well, all leaders in this entire space. Of course, these are all companies whereby, huge market cap, and they alone account for about almost half of the NASDAQ, all right? The NASDAQ Composite Index, about half of the NASDAQ Composite Index. So they are some of the strongest companies in the world, all right, leading the index as well. And today we'll be covering just 2 stocks, right? Just 2 of these M7 that are in my watch list for more upside. But more importantly, based on these stocks, right, how do we actually take a position whereby we can actually see a higher returns, higher ROI? And that's where Marcus will come in to share a bit more on how you can use DLC to increase your ROI. All right, so that's what we're covering today. So just a quick disclaimer, right? Whatever they shared today is just for education purpose only. So please do your own due diligence as well. All right, it's not to ask you to buy or not to buy, all right, or not to sell or not to buy, but essentially just to education purpose only. All right, so please do your own due diligence. So how many of you want me to cover what we call like the NASDAQ Composite Index, right? That pretty much represents the top technology companies in the US. Just type N for NASDAQ, guys. All right, if you want me to cover like what we call the NASDAQ Composite Index, type N for NASDAQ. All right. Hi, good morning, Peter, as well. All right. Those of you who are just joining us, welcome. All right. And we have only just started, guys. Welcome to this live show called the Magnificent 7 US stocks. I have a very special guest right here called Marcus. All right. Maybe, Marcus, you can do a very quick introduction on yourself, like just a quick one. Go ahead, Marcus.
Sure. So hi everyone. So my name is Marcus. I'm from Society General. So thank you, Joey, for inviting me onto this live show. Very excited about this. Society General, we have issued this daily leverage certificates on the SGX for more than, this is the eighth year now. So we are 8 years running. And we constantly be expanding the shelf, and we've launched the US stock DLCs, which I hope you guys are excited about, because I'm going to share with you guys in just a bit later on what this US stock Magnificent 7 stock DLCs that we have on the SGX that was quite recent. It was recently launched only.
Nice. Thank you, Marcus. All right, thank you so much. So Marcus, guys, if you don't know Marcus is from Socgen, all right, in short, and pretty much his company is the issuer of what we call DLCs, right? Very, very interesting product, guys. Essentially, as I mentioned just now, it allows you to take in a position, all right, not just in the underlying stock by itself and just make a normal return, but with DLC, if you get the position right, all right, if you're in the long position, all right, you buy a stock, but you're able to make up to like 3 times, 7 times of that return that you're, potentially making if you just were to buy the underlying stock, right? So Marcus is an expert in that, right? He'll share a bit more on that, and that's why I have him on this show today to share with you guys a little bit more, right? So let me move on right now, guys, to talk about the NASDAQ, right? The NASDAQ Composite Index. So this is the NASDAQ Composite Index, right? That pretty much accounts for some of the top technology companies in the US. And I mentioned, right, the M7, right? The M7 stock, the magnificent 7 stocks alone, these 7 stocks accounts for almost 50%, almost half of the entire index. So, when the M7 stocks move, the NASDAQ stock will move as well, right? Whether going up or going down, right? So very important. So, and even for the NASDAQ, if I'm not wrong, Marcus, you can actually take a position using DLC on the NASDAQ, correct?
Yes, that's correct. Up to
Exactly.
7 times leverage for both
Very
long and
good.
short
So,
direction.
very good. So up to 7 times, guys, long and short as well. All right. And that's where if you are someone who don't want to do like any stock picking, right? Whether is it like Apple or Amazon or Microsoft, you don't want to pick any stock. You just want to get into the technology index, the NASDAQ. All right. Well, you can do that as well using what we call DLCs. Later, I'll leave Marcus to share more of you on that. All right. But why not let me just go ahead to do a quick coverage of the NASDAQ right now. So this is the NASDAQ, all right? 19,954, right? 19,954. So you can see for NASDAQ, right, we actually have been in the longer term uptrend, right? Longer term uptrend since last year, right? Why do I say that? Well, just by looking at what we call the 100 days moving average. You can see 2023. 100 days moving average, the rates above the blue line right over here in about May 2023. So previously, we had 2022, we had the rate hikes and inflationary pressures. So it was a downtrend. Look at this, the red and blue were just moving down, down, down. But we saw the crossover right over here. So the longer term trend has turned up since last year, not just last week or last month, guys, in case you're still wondering when, right? So there's been a very strong longer term uptrend, right? But in the short term, we actually saw weakness. Look at this, right? So when we see the 20 days moving average, the green line pointing down, that's where we could see weakness. Look at this, right? A bit of sell down in the week, in the short term. So in the short term, it can be down, right? It doesn't mean that the longer term trend is up means you'll forever be up. No, right? In the short term, you could be down maybe about a month or 2 months, a few weeks, and that's what's happening, right? And that's what can potentially happen. And the key here is that when we were to see the short term trend reverse back up, like something over here, right? Something over here. You can see the green line start to reverse back up, and there we go, right? There we go. So that's when not just the longer term trend is up, but the short term trend is up as well, right? So let me do a quick analysis for NASDAQ, right? So you can see that over the past 1-2 months, we saw actually a little bit of weakness. I can draw this resistance level right over here. I think that would be somewhere around the 20,000 level, right? But you can give a little bit of allowance over the past weeks, where the 20,200 for the NASDAQ, 20,200 for NASDAQ. I think that is a very key level whereby, we touched, came down, all right, a couple of times, we just couldn't get above it. In fact, over the past few days, we are nearing the 20,200 resistance level, right? So I think that's a very, very key level to watch, very, very key level to watch. We can go above that 20,200 potentially, all right? That's where we could trigger much more upside momentum. Targets could be revised, right, all the way maybe to around that 21,000. I think that is where potentially we could see more strength in the markets, and the technology companies will start to lead the index even higher, right? So this is the NASDAQ. I think it looks quite okay right now. Longer term uptrend is intact. In the short term, you can see it was like up. Of course, we saw a bit of resistance last month, all right, when there were some talks about, slowing down the pace of rate cuts by the Federal Reserve, right? So you can see the short-term trend, the green line started to flatten out, maybe even point down a little bit, right? But right now, you can see the green line is starting to point up, right? So there are some signs of strength. There's some signs of strength, right, in the markets, right? Especially when just last week we had Donald Trump officially inaugurated as the US president, right? That's where he signed a lot of executive orders. He's more known as pro-businesses as well, and we are starting to see some certainty and some strength in technology companies, right? So looking pretty good. And if I can just turn on, right, very quickly, guys, and turn on, for those of you who have been following me, we have this indicator called the One Good Trend Pro indicator. In short, it's One GT Pro pump. Click on it. You can see that since last year, we had a couple of bullish signals in the market. Look at this pump, all the way to bullish signals. There we go, all right, all the way up. And when we see a bearish signal, you can see not too good. That's where we started to sell down, right? A bit of sell down. And we've got a bullish signal in September. There we go, right? So right now, you can see the most recent one was actually a bearish signal somewhere in December. So this bearish signal is still here. Why? Well, as I mentioned, because if I can just turn on the trailing, right? You can see this is a trailing support that follows the NASDAQ as it moves up from October all the way to December. But over the past 1-2 months, right, there's some weakness. The green 20 days moving average line started to slope down, and we also broke below the trailing support, right, that we have been supported above. So a little bit of shakiness, right? But as I mentioned, as long as we can go above that 20,200, right? Well, I think that would be a plus point. All right, if we can go above that 20,200, we could see a new bullish signal. All right, and that could be the start of more upside. All right, so that is for the NASDAQ, right? Pretty much the index that tracks the top technology companies in the US. All right, so yeah, I hope you guys got a better opinion. And Marcus later will share a bit more on how you can actually take a position using DLC. So how many of you want me to move on, like maybe to the top M7 stock? Just type 7, guys. Type 7 in chat if you want me to share with you guys what are the top 7 M7 stocks you want me to go through very quickly and share with you guys. Type 7 in chat, let me know. All right, for those of you who are just joining us, welcome to this live show called the M7, the Magnificent 7 US stocks. All right, and today, I have a very special guest right here called Marcus from Socgen, who will share with you how you can actually take a position, all right, on these on the NASDAQ and also the M7, the Magnificent 7 stock, right, and actually get a higher return or higher ROI. Right, if you know what to do. All right, later Marcus will share with that, share with you guys that. Right, thank you so much, James. 7, M7, 7 as well, 7. Very good, guys. So as I mentioned today, right, we'll be covering the M7 stocks, but not all of them. We don't have time to cover everything because we have a Q&A at the end as well. So if any of you guys have any questions on DLC specifically, right, that's where Marcus, an expert in this product, right, will come in, and please feel free to ask any questions because seldom you'll get Marcus, right? It's a very busy man, all right? Lots of trainings and stuff to do. But today, very special guest right over here because I will add more value to you guys, and that's where Marcus will be here to answer your questions, anything related to DLCs. All right, so let's go ahead to get started right now. And since all of you are asking about these 7 stocks, let me go ahead to share one Magnificent 7 stocks that I like currently. All right, basically it's my watch list for potentially more upside, and I think you can put it in your watch list as well. So what is that stock? Well, as I say, right, the M7 stock would be companies in the top technology companies in the US, right? So what are these companies? Well, they are Apple, Alphabet, Amazon, all right, Meta platform, Meta, all right, and we have even Microsoft, Tesla, and NVDA. So today I'll be sharing with you this stock called Tesla, right? Tesla. I think all of you know the founder is Elon Musk, right? And we saw a really, really good move. Of course, now we saw a bearish signal, a little bit of weakness. I'll come to that in a bit, as to why this is my watch list, even though we are seeing a bearish signal. But let me just do a quick overview of why Tesla has been in my watch list. So you can see for Tesla, right, over the past 2 years, it was actually pretty boring, all right? So let me just quickly turn off everything so it's a bit clear. You can see that for Tesla, we were in fact trading below this very key resistance for almost 2 years, right? The 280 resistance, and we just couldn't get above it. So this was in 2023. Look at this. We just came down. And even here as well in 2024, last year, July, we went near it, came back down again, right? So we were actually kept below this 280 resistance level, and we just couldn't get above it. But until, all right, somewhere around November, look at this right over here. In November, we broke the 280, all right, resistance level, and off we went. And we did that, right? You see that the longer term trend was up. The short term trend, based on this green line, the 20 days moving average, you see, right? It was like flat, very boring, right? But finally, the green line point up, the short term trend turned up as well. And there we go. Very strong rally, all right? Of course, now, over the past 1-2 weeks, there are some signs of weakness, right? Look at the green line. The green line, that represents the short-term trend, has started to, from up, it is starting to turn down. So a little bit of weakness in the short term, right? So maybe just want to monitor a bit, right? But the key here is that, what if, right, we could start to see some strength coming back again? Because now, when we are seeing weakness, it could actually be an opportunity, all right, to get in at some pretty good, attractive levels. Does it make sense? All right, so now let me go ahead to turn on what we call the 1GT Pro indicator, right? So let me turn on. You can see that we had 2 really good bullish signals coming out in October, right over here, right? And there we go, right? There we go, by about, I would say, 87, 88% in just about 2 months. So we got a bearish signal. Why do we have it? Well, if I can turn on what we call the trailing support, you can see that right over here, we kind of like broke down below the trailing support. So this trailing support, based on the one good trend strategy, it gives it allowance for a stock to move up. So essentially, we want to be above this trailing support, right? As the stock moves higher, the trailing support follows, right? It gives it breathing space and leeway to move even higher, all right? But one finding, if you to go below it, right, not so good. Once we have given it allowance and yet it still goes below it, that's where we could see weakness. And that's exactly what happened, right? We got a bearish signal, we went below it. The green line is starting to flatten out and maybe even turn down, right? So why is this stock in my watch as well? Because, right, I think now we are seeing a bit of weakness, right? And if I can just, just put down this support right over here, I think we are seeing maybe a bit of support around that 375 level. 375 level, because that's where we saw a couple of bargain hunting, even a bullish candle. So 375 would be where potentially we may see some buying pressure coming back. And if the green 20 days moving average line were to reverse back up, something like what we've seen over here, right? It's down, 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 pump. I think that could be a really good opportunity of more upside. And, of course, even a new bullish signal coming out as well. We could even see more strength, right? More strength. So upside could be, from here all the way to here. That would just be, about a 21% upside, just by getting in near the support level, a 21% upside, right? Of course, if it breaks the resistance at 480, as I mentioned, right, we could see even more upside. But just to keep it conservative, based on this plan, a 21% upside, just by getting in near a support level, if the short-term trend were to gradually stabilize, right, a 21% upside, right? So that's for Tesla, right? One of the stock in my watch list, I would say an M7 stock, whereby you could watch, all right? But more importantly, I'll leave Marcus right now to share a little bit on DLC. So I've talked about the NASDAQ, right? I talked about the Tesla stock as well. Later, not to worry, I'll come back and share with you guys one more stock. But now I want to pass on the mic to Marcus, right, to share with you guys this product called DLC. It might be new to some of you, all right? You have no idea what is DLC, how do you use it and stuff. Not to worry, Marcus will share a bit more on DLC very briefly, what is it about, before diving into the NASDAQ and, of course, Tesla. All right, so Marcus, your call. Go ahead.
Hey, thanks a lot, Joey. So hi, good morning, everyone. All right, so it's first time I'm doing a live web show, and it's in the morning, but it couldn't have been a better time right now, because I think those of you who are following the market right now, it's been quite a crazy morning so far. You see that the NASDAQ futures is already down minus 1.8% of almost 400 points just itself on news that, the China launched last week a DeepSeek AI model, which was supposedly rattling the NVDA shares. NVDA shares is down 5% during Asian hours right now. So it's been nothing. It couldn't have come at a better time right now, where you are learning more about the DLCs and how you can use the DLCs to capture such big moves in the market, especially during Asian hours, right? So this is really an opportune time. So for those of you who have not heard of this daily leverage certificates before, or DLCs in short, let me give you a very quick introduction on what the DLCs are. For us, Socgen, we are the issuer of these daily leverage certificates. We issue these products and we list it on the SGX securities market for you to buy and sell the DLCs. We'll also be providing liquidity throughout the trading day, 9 a.m. to 5 p.m. Singapore market hours. We're providing liquidity in the bid and offer prices for you to buy and sell the DLCs with ease. All right, so all the DLCs will track a particular underlying, like what Joey mentioned just now, whether it's Tesla, NVDA, or even Hong Kong shares or Singapore shares. We do have DLCs on them as well. Your Tencent, Alibaba, Meituan, your Singtel, DBS, UOB. We do have DLCs on all of them, and we have a long DLC as well as a short DLC on each of the underlying. All right, so that means you can trade both directions of the market. If you're bullish, you will buy the long DLC. If you're bullish on the underlying stock, you will buy the long DLC on that stock. If you are bearish on the underlying stock and you think you want to profit from it, you will buy the short DLC. All right, so that's the basics of the DLC. Every single underlying will have a long DLC and a short DLC. And then there can be different leverage factors. All right, Singapore stocks, Hong Kong stocks, we have 5 times leverage. Indices, we go up to 7 times leverage on the Hang Seng Tech Index, Hang Seng Index. On the NASDAQ 100 index, we also go up to 7 times leverage. All right, and then for the US stock DLC, which is something new that we've launched just last year, just in time for the Tesla rally. We launched it last year just before Tesla started to skyrocket. We launched the Max 7 stock DLCs. And so this is our webpage. We have a webpage over here, dlc.socgen.com /US DLC is our webpage for the US stock DLCs. So you see that little red robot over there. That little red robot represents our Magnificent 7 stock DLCs. Going in line with the AI team and the technology team, we do have this little red robot, and hopefully when you see it around in advertisements, etc., in articles, you will know that this is our Socgen US stock DLCs. All right. So these DLCs is a pretty basic payoff. It's not like an option. It's not like a warrant. All right. It is more like a leverage and inverse ETF. All right. So for those of you who trade the TQQQ or the SQQQ in the US, that's your ProShares Ultra 3 times long and short NASDAQ QQQ ETFs in the US. These DLCs have exactly the same kind of payoff as your TQQQ or your SQQQ. All right. Every day you get that same fixed leverage factor on the underlying assets daily percentage performance. Just that for the TQQQ, SQQQ, it's an ETF structure. So it's kept at about 3 times leverage. You cannot go higher than that. But for us on the DLCs, it is a certificate structure. So it means that we can go higher in terms of the leverage as well. All right. So we have up to 5 times, 7 times leverage on the NASDAQ 100, S&P 500, and the Dow Jones. And for the US stock DLC, we are just starting off now with 3 times leverage, but it doesn't mean that we cannot go higher in the future. But right now, we do have 3 times leverage on the Magnificent 7 stock DLCs. All right, so this is a list of our DLC before I carry on, just to show you that it's real. There's such a counter. This is the list of the US stock DLCs that we have. And then let me just filter over here by currency, because we do have both SGD and the USD currency that you can choose to trade. So if you prefer to trade in SGD, go ahead. But if you want to choose the USD as well, you have USD dollars lying around in your progress platform. You can always use the USD counter as well. All right, so this is the list of our Magnificent 7 stock DLCs. Each of the underlying Magnificent 7 stock, we have a long and a short DLC, right? You have the USD currency over here, USD counters with the US dollar at the back of the name, while you have the SGD counter as well, all right? So these are pretty much all the Max 7 stock DLCs that we have, 28 of them, long and short DLCs, 3 times leverage. And you can see it's quoting right now during Asian hours. All right. So these Magnificent 7 stock DLCs, how does it work, right? What is the benefit of it? All right. So this one, let's look at the benefits first. For a Max 7 stock DLCs, there is a long and short for each of them. All right. So in volatile times like this, where the NASDAQ futures is down 1.8% today, 400% during Asian hours, you could use a flexible or a versatile instrument like the DLCs, where it can go both long and short directions. Right. If you believe that the NASDAQ and the NVDA is down so much during Asian hours today, you can use long DLC. You believe that it will rebound back when it comes to the market open in the US, you can use the long DLC. All right. But if you are, you continue that, you think that the momentum will continue, it will continue to fall further ahead of the US market open later on, you could use the short DLC. All right. You could even use it to hedge your positions right now. If you are holding a big bag of NVIDIA shares right now for the long term, but you see a market correction right now, you think that the news is going to get worse, you could use the short DLC to make some gains as well to offset some of your paper losses in your overall long-term buy and hold NVIDIA stock portfolio. All right. So you have also leverage exposure, 3 times leverage on the underlying US Magnificent 7 stocks. So in such a trading range, in a small trading range, if you see there's opportunities, you could use this kind of 3 times leverage so that you can magnify your exposure within that small trading range with that 3 times leverage. All right. And I think the key value proposition of the US stock DLCs, the Magnificent 7 stock DLCs, is the convenience of trading it on the SGX securities market during Asian hours. You can buy it through any regular stock brokerage account, including the Philip Poem's trading platform. You can buy and sell these DLCs. And there is this new trading window during Asian hours right now. All right. Now it's 10 a.m., 10:57 a.m. Singapore time. You can gain exposure to the Magnificent 7 stocks right now ahead of the US market open. All right. You see that the NASDAQ futures is down 1.8%, down 400 points today. and you see that NVDA is down 5% during Asian hours right now, you could use this DLCs to get in early ahead of the US market open. All right. So between 9 a.m. to 5 p.m. Singapore time, this new trading window during Asian hours, you can use the Max 7 stock DLCs to gain exposure, to initiate any exposure, or to capitalize on any opportunities during Asian hours in the case of any high impact news such as today, where the stocks are moving during Asian hours. All right. And lastly, these DLCs are all quoted and traded on the SGX securities market. All right. So the prices range around, you see, $7, $6, $3, $5. So you can buy them for as little as 100 units. So it's same as Singapore shares, 100 units spot lot. So you can buy it for as little as $600, $800, and that's at a fraction of actually buying the stock itself. So that gives you capital efficiency, but as well as cost efficiency. All right. So for those of you who are more active, you could definitely use this kind of capital efficiency and cost efficiency. All right. So these DLCs, I think one basic principle about how it works is really that I mentioned it's like a leverage and inverse ETF. So it's a TQQQ, SQQQ. All right. It'll give you that 3 times leverage of the underlying stock's daily percentage performance. All right. So every day you get that 3 times performance. If you go into our education tab over here, you can learn more about the DLCs, because whether it's a Singapore DLC, Singapore stock DLC, Hong Kong stock DLC, or US stock DLC, the principle is still the same. All right. Every day you get that 3 times performance of the underlying stock's daily percentage performance. So if NVDA or Tesla is down by 2% today on a US close to close basis, all right, my 3 times short NVDA DLC will be up by 3 times by 2% is 6%, while my 3 times long DLC will be down by 6%. Conversely, if NVIDIA or Tesla was up by 2% today, all right, my 3 times long DLC will be up by 6%, while my 3 times short NVIDIA Tesla DLC will be down by 6%. And this happens every day on a close-to-close basis. You will get that 3 times performance of the underlying stock's daily percentage performance. All right, so that's the basic principle of the DLCs. We can go into the Q&A later on. I'm sure many of you have questions about it. But that's the basic principle of the DLCs. It is not an option. There is no at the money, in the money, out the money kind of concept. All right, it's not a margin product. This is basically a DLC, a fixed leverage instrument, very much like your leverage and inverse ETF, like your TQQQ or your SQQQ. All right, so if those of you who trade the TQQQ, SQQQ, this is a no-brainer. This is, exactly how it works. This is exactly the same as your TQQQ or your SQQQ. But we do have single stock underlyings for this one on the Max 7 stock DLCs. So let me go back into the Tesla one that Joey mentioned just now. All right, so if you are bullish on the Tesla stocks, you think that you'll break above 480, you could look at the 3 times long DLC TSYW. This one is denominated in the Singapore dollars. All right, so there is also the US dollar one, but this one TSYW is a stock code. This is for the 3 times long Tesla DLC. All right, so in the name of the DLC, you can tell a lot about the DLC. So if you look into your POEMS trading platform and you type TSYW as a stock code, you'll be able to see this 3 times long Tesla DLC. And in the start of the name, it is the underlying that it tracks. So this DLC will track the Tesla share price. All right. And then there is a 3 times leverage in the name, 3 times, followed by this is a long DLC. Remember, if you're bullish, you buy the long DLC. If you're bearish, you buy the short DLC. Please do not go and short sell any DLC in the market. We got to come rescue you in the buying market. So whatever it is, you initiate your position with a buy trade. All right, you either buy the long DLC or you buy the short DLC depending on your view. All right, and then you see the name, there's the SG over here as well. That stands for Society Generale. All right, so not Singapore, right? It stands for Society Generale. We are the issuer of this DLC, so you can look out for it. And then followed by the expiry date in year, month, date format. All right, you can see that it's a long dated DLC. So it expires only in 2026. All right, so by right, these kind of instruments do not need to have an expiry. It can be open-ended because the expiry does not impact the payoff whatsoever. There's no time decay on this DLC. So it does not impact the DLC, but due to certain regulations, we got to have a maximum of 3-year expiry. And so all our DLCs will have 1, 2-year or 3-year kind of maturity. So it's long dated. All right, so don't need to worry too much about the expiry date because it does not affect the performance. All right, so you can see Tesla DLC. This one is the Tesla 3 times long DLC TSYW. If you look at the Tesla short DLC, let's look at it. This one is the Tesla short DLC, but in US denominated. You see the US dollar at the back there. So if you prefer to use USD currency, you can choose this Tesla short DLC, TSUW. All right, so that's the stock code over there, and this is the short DLC. So this one is cheaper in terms of the lower price range. All right, but for DLCs, the higher the price, the better. All right, it's always the higher the price, the better. For this Tesla long DLC, can anyone guess what price was this issued at? All right, we launched this last year in October, just before the rally, just before the Tesla share price started to rally because of the Trump's election victory. Anyone can guess what was the share price, what was the issue price of this DLC over here? All right, this issue price of this DLC TSYW is now trading at $13.37. What was the issue price? Anyone make a guess?
Make a guess, guys. All right, make a guess. See,
Joey, make a guess. How you make a guess?
Probably about $2 or $3.
A bit higher. It started off at $5. All right, it started off at $5 back in October. This one, but now it has risen double, almost tripled to $13. In fact, it went up to as high as about $16 plus when Tesla started to rally. So you can see over here last year when Trump, this was the earnings result 23rd of October last year, and then it started to move. Tesla share price started to move plus 7%, etc. And then it started to rally. But the kicker was here on the 7th of November or 6th of November. All right, 6th of November, that is the key, the catalyst when Trump won the election. When Trump won the election, and that's when Tesla share price started to supercharge and started to skyrocket. And then this TSYW 3 times long DLC started to track that as well and follow up, and it went up to 100, 200%, 300%, up to 400%, 450% on the back of Tesla share price rally. All right, so that is how the DLC is tracked. Every day it will track on a close-to-close basis the 3 times performance. But if you manage to capture a nice trend like this, all right, Tesla can go up by more than 3 times performance. So you can see over here, Tesla was up by 454% last year. So if you bought it in October and you sold it and you see it at 17 December, it was up by 454% on the back of Tesla share price gaining 99% or 100%. 100% times by 3 is only 300%, but my TSYW was up 454%, all right? It went up to as high as $27. Now it has dropped back to 13.3%, but it went as high as $13.37, but it went as high as $27.70 back in December last year. That's 454% on the back of a 99% gain on Tesla. All right, so that if you manage to capture a nice trend, that really helps to supercharge the DLCs because of the compounding effect. So Joey has one good trade, one good trade system. We have a one good trend, we have a one good trend as well. System where if you manage to capture one good trend, this can go up to really triple digits. All right, of course, this is a good case. Your Tesla short DLC would have magnified losses as well. Let's just be very balanced over here. You look at the Tesla short over here in the last 6 months, it hasn't done so well as well. In 17 December last year, it was down 64%, and it went even lower than that actually on the back of Tesla's very massive rally last year. All right, so that is a balanced view. Your gains are magnified, but your losses are also magnified. All right, so I mentioned just now, before I hand the time over to Joey, one very important feature about the DLC is that everyone has to understand. Of course, 450% looks great, and it's big, etc. On the 3 times leverage only, you can get 454%. But this compounding effect is really a leverage is a double-edged sword. So you have to beware of the risk, but also the compounding effect is also a double-edged sword. In a nice trend like this, you can get more than the 3 times performance, 99% gain on Tesla, but more than the 3 times performance on the TSYW 3 times long DLC. But in a sideways market, it might not perform so well. All right, so for the compounding effect in a sideways market or a volatile market, it might not work so well for you. You might get less than the 3 times performance. That is the compounding effect of the DLC. For any fixed leverage instrument out there, your DLCs or your TQQQ, SQQQ, there is this compounding effect that everyone has to understand, because it can work for you in a nice trending market, but it can work against you in a volatile or sideways market. All right, so you can find out more about the compounding effect on our website over here. The compounding effect, how does it work? It works for you in a nice rising market where you can get more than 3 times performance, but it might not work so well for you in a volatile or sideways market. All right, and that's also another reason why the DLCs are not buy and hold instrument. All right, so please take note that this is a short-term trading instrument. It's not a buy and hold instrument that you can hold for 6 months or even a year. All right, this is a short-term instrument where you can trade it intraday for a few days, a few weeks, maybe 1 or 2 months, but please do not buy and hold this for 6 months or even a year. All right, because there is overnight costs and fees, but also there is this compounding effect that might not work so well for you in the long term. All right, so I encourage everyone to read more about the DLCs over here. Under our education tab, we have videos. Over here, we have videos. We have write-up on the features of the DLC. You can also watch our US stock video over here to learn more about what the US stock DLCs are and how does it work. All right, so this one, please do have a look at it before you start trading the DLCs. 3 times long and short, simple as it is. Every day you get that 3 times performance of the underlying stocks, daily percentage performance. Every day you get 3 times. But you are encourage you to everyone to watch the videos and to read up a bit more, because there is features such as the compounding effect or the airbag mechanism that you have to understand a bit more before you trade the DLCs. All right. So remember, Tesla over here, as what Joey mentioned, if you are looking for long DLC, that's the TSYW. If you're looking for the short DLC, that's the TXXW. Type it into your brokerage trading platform, your POEMS trading platform. Type it in there, and you should be able to see it. All right, so check it out, or you can come to our website, dlc.socgen.com, to find out more about the DLCs. See the chart, find out how it works. This is the Asian hour price as well. So this is the Tesla now trading at $395.35 during Asian hours at 11:08 a.m. now. There is actual trading activity on the Tesla share price during Asian hours right now, and that's the price that we track. So we do publish the price over here. Tesla share price is at $395.35 right now. And its previous close was 406.58 last Friday, US market close. This is the share price now, and that's what we track. All right, so check it out, our website. If any questions at all, you can always give us a call on our hotline, 6226-2828, for any questions that you have on the DLCs or even the US stock DLCs. All right, so I know there's a more exciting stock to talk about right now. Joey's going to go on to the next exciting stock, NVDA. And that's even more exciting because it's down 5% now during Asian hours, right? NVDA. Over here. So I'll pass the time now back over to Joey, and let's start on NVDA.
Thank you so much. All right. Thank you so much, Marcus, for really sharing on DLC. I hope you guys have a better understanding of what DLC, right? Daily leverage certificate means, right? What it actually does, why is it a leverage 3 times, 5 times, 7 times, and how you can actually take not just long, but also a short position, right? So if you want to find out more info, go to the website. All right, just go and Google, right? Go to the website, Socgen DLC. That's where you find more info. And I know we have some questions, right? In fact, later we will have a Q&A, guys. And let's take a look at some of the questions, right? Is DLC open during the US market, right? We have some of the questions like, can the DLC be traded during the US market? Very good questions, guys. Later we'll have a Q&A. So not to worry, if you have any questions, in fact, right? Any questions, go ahead to type it in the chat, right? Type it in the chat. And after covering one stock that I have in my watch list, one of the M7 stocks, right? That's where I will have Marcus back up again before we go to Q&A. And that's where we answer any questions regarding DLC. So any questions on DLC, whether is it on compounding, whether is it on when can it, when is it tradable and all that, go to us in the chat, all right? And that's where, Marcus, the expert in DLC, will be here to share more, right? So let me go ahead to just share my screen right now. So I think Marcus mentioned a really, really important point, right? I think, for Tesla, which I mentioned just now, we saw from the One Good Trend Pro indicator, this indicator that I have, all right, for my graduates and for my mentees, all right. And of course, if you're going to find out a little bit more, guys, as I say, right, I mean, live Ask Me Any Stock session as well, you're going to find out a bit more about the entire strategy. How do you even have access to like an indicator like this, whereby it gives you an opinion in seconds, right? Attend one of those free webinars. We don't have any webinar this week because it's like Chinese New Year, but maybe next week we have one webinar, all right? Maybe I'll just place the link in the chat, right, to find out a little bit more if you want to attend a free webinar and understand a bit more on this, like, to this indicator, which just guides you when to get in and even when to get out. So for Tesla, I mentioned, right, we got some really good bullish signals right here, right? In October, all right, a week later, there we go all the way up. And Marcus mentioned about a 99%, right? Based on the underlying stock, 99%, right? If you're just to buy Tesla stock on the normal US exchange, right? 99%, that's pretty good, right? That's pretty good. But what if, right, you were to get in on the DLC, right? The 3 times DLC, all right? So 99, let's say 100, right? 100 times 3, by right, it should be 100 times 3, it should be 300%, right? that could potentially be the gain. But because of the compounding effect, it's not even 300%. It's more than 300%, right? In fact, it's more than I think it's like 450%, right, Marcus, if I'm not wrong, right? Because of the compounding effect, because you are getting the direction right, all right? And, the compounding effect takes place, it continues to push higher. That's how you really leverage, right, the power of DLC to get a much, much higher return. So very powerful too, right? Marcus will share a bit more on compounding as well. If you guys have any question on that, not to worry. But how many of you want me to move on maybe to the second, right, US stock that is in my watch list? Right, so we talk about Tesla. I mentioned, right, for Tesla, we had a bearish signal. Not yet, but we are waiting, right? Just for info, we are waiting for like a bullish signal for the confirmation of the short-term trend turning up. If that happens, that's where we want to, potentially pull the trigger, all right, to ride potentially even more upside. And of course, DLC could be our way as well, all right, to ride these massive gains. Okay, so how many of you want me to share with you guys, like maybe just one more US stock before Marcus comes back again? Just type two guys in the chat. Type 2 in the chat if you want me to share with you the second M7, right? Second M7 US stock that is in my watch list to potentially, make even more gains, right? Especially with DLCs now that you guys know about. Let me type 2 in the chat. All right, let's see. Thank you so much, Poon. All right, go to like and share, guys. If you can do us a favor, right, just go to like and share, right? Like and share as well. That will be really helpful because when we go live in the future, that's where you will be notified. So if there's a follow button, subscribe, hit the notification. So when we go live, you will be alerted as well. Hit the heart shape button as well. Right, that will really help out the channel. Follow if you have not yet. All right, and let's move on to the second stock. All right, thanks Chi Sing, thank you so much, Poon as well, right? Amanda too, all right, Glenn Hin, Google, right? One of the M7 stock, but not Google. Let me share with you guys one stock today. All right, I think that would be one of the most popular stock that a lot of people are asking about. Even for my clients in Philip Securities, they're asking about it as well, and that would be what we call NVDA, right? NVDA, right? NVDA right over here, right? So let me go into this, just turn it off, right? You can see based on the chart, this is NVDA at about $142. So this is the underlying stock that is traded on the US exchange, right? The normal stock, right? That most people buy, all right? And let me do a quick analysis, right? You can see that for NVIDIA, right? We have been in a longer term uptrend, I would say, since like 2 years back. Look at this, the red and the blue line, they're both pointing up, red above the blue. So the longer term uptrend has been intact, right? The move really started, I would say, right over here when we broke in beginning of 2024, right? Right over here, you can see we actually broke above this resistance around the $50, $51, $52. Look at this, right? After breaking the resistance, the green 20 days moving average line started to point up. And there we go, right? And let me see this, what's the percentage gain, right? That would be like about 70, 80% gain in about 2 months, all right? We saw some weakness, buyers came back and off we went again. So this is where we are right now. You can see we started to push more, higher and higher, and we are now about $142. So if I can quickly just turn on, all right, the 1GT Pro indicator. Look at this right over here. So again, this 1GT Pro indicator. All right, and I mentioned, right, look at this, guys. For NVIDIA, we actually had a bullish signal right here, and off we went before getting a bearish signal. And then 2 new bullish signals coming out, pump, and there we go. So every time you get a bearish signal, well, it means that there's some selling pressure coming back. You want to be careful, take some profit if you want, right? So that's where, you're seeing a bit of a weakness. Bullish and bearish came down a little bit. 2 new bullish signals in October before a rally up again. And now we started to see a bearish signal. And let's take a look, right? Over the past 1-2 weeks, well, we had a new bullish signal coming out as we attempted to break the $150. So let me go to draw this resistance level right here. I would say that the 150, about 152, or maybe let's just say 155, right? 152 to 155. That would be a key resistance level for now, right? Why do I say that? Well, over the past like 2-3 months, you see, guys, that we just couldn't get above it. We actually attempted to break and stay above, but it came back down, right? In fact, just last week, we neared it and we sold off again, right? We sold off again, right? But the key here is that the longer term trend is up. The short term trend still looks okay as well. All right, look at this, right? Longer term trend is okay. In fact, I can draw this support level right over here around the 130. So 130 used to be a resistance level, all right? We came down, but somewhere over in October, after getting 2 bullish signals, we broke above it, right? Went up to 150 plus, came back down, retested, respected the same support level last week, respected the same support level. So I think 130 would be a pretty decent support level. The range, I would say 130 to 150, maybe 155. I think that is pretty much where, all right, we are seeing the range. So that would be about a 17, let's just say 15%, right? 15% upside just by looking at this range. That is if you were to get in, right, near the support level, all right, and to ride a rebound maybe all the way to the resistance level. That's a 15% upside. First, if you use DLC, all right, and it will be like a 3 times DLC, right? Long 3 times DLC, then it will not be 15%. It will be 15 times 3. It will be like about 45%. Does it make sense? That is if you were to use DLC. So that is my take on NVIDIA. I think it looks pretty good, right? We are starting to see a bit of strength coming back. The green 20 days moving average line is starting to slow down. In fact, we have caught for it like a few weeks back when it approached the 130. Now it's making its way back up again. All right. If we can break the 155 level or 154, 153, I think that would be where we get another confirmation. We may even have another bullish signal coming out, and that's where potentially we could see even more upside to 170 to 180. All right. So that is for NVIDIA. I think we're still looking bullish. All right. This bullish signal seems to be still playing out, right? And we are seeing pretty good support around the $130. All right. Okay, good. So I think right now, guys, now that I've covered like NVIDIA, let me pass the mic back to Marcus, right, to share with you on how you can actually take a position using DLC on NVIDIA. All right. So Marcus, it's back to you. Go ahead.
All right. Thanks, Choy. All right. So NVIDIA is quite an interesting stock because really today itself, I mentioned just now that, it's being hit by big news, high impact news right now. I think last Friday as well. Last Friday, NVIDIA was down 3%, right? Last Friday, NVIDIA was down 3%, minus 3% last Friday during the US market hours. And then this morning itself, it is down about 4 to 5%. It's trading around $135 right now. It's down about 4-5% from its previous close of 142.62. All right, so it's really being hit right now, and it's really an exciting stock right now. Okay, I don't know whether you see this as an opportunity or not, but it is quite a big move. Last Friday down 3%. This morning down 4 to 5%. That's NVIDIA. So that is on the back of the news of the China's new AI model, and it's rattling the markets, especially NVIDIA, people always thought that it has a very strong lead. But who knows? This could be a buy on the dip opportunity, or this could be a sell on strength opportunity. I'll leave that to you and the one GT system to decide for yourself. But the instrument itself, right, that you can use, especially now during Asian hours, if you want to get in now early ahead of the US market open, you think that NVIDIA is down 4 to 5% now. You think that it's going to rise. You're going to slowly crawl its way back up as you get closer to the US market open. You can get in now using the 3 times long DLC, right? That's the US dollar one. Let's look at the Singapore dollar one. Just for everyone's sake, Singapore dollar could be more familiar. So that's NVIW, right? It's down almost 21% now because NVIDIA share is down. But it's at $5.51 right now. We are quoting at 563, 564. All right. So that's the last traded price. But our bid and offer prices are now 564, 563. All right. And we're quoting $1 million on each side. So don't need to worry about liquidity. We're quoting 1 million Sing dollars on each side for you to buy and sell the DLCs. So now 11.21, we're quoting at this price right now based on NVIDIA share price of about $136. So if you think that NVIDIA is going to start crawling its way back up before the US pre-market, before the US market hours, you can get in ahead now. You can buy the DLC at $5.64. All right, and you'll rise in tandem if NVIDIA continues to claw its way back up after being down 5% this morning. All right, but if you think that NVIDIA is just going to get worse, the selling momentum will continue. Is sell into the strength. You could use the 3 times short NVIDIA DLC. All right. So this one is the US dollar one. Let's look at the Sing dollar one. So 3 times short NVIDIA DLC would be NVDW. All right. This is a Sing dollar currency one. It's at $2.77. We are quoting at 273, 274. Sorry. So 273 is at 274. If you believe that it's going to fall even further as you go into the US market open, where people start to dump the stock, maybe you could buy the DLC now, the 3 times short DLC now at $2.74. All right. So that's the long and short DLC, Sing dollar currency. You can choose the US dollar currency one if you want. You can just go to our product search page and look for it. All right, so this one, so there is, during Asian hours right now, a big move on NVIDIA, and you could capitalize on these opportunities using the 3 times long or 3 times short NVIDIA. So if you believe you are bullish, if you think you're rebound, you can look for the 3 times long NVIDIA DLC. That'll be the NVIW. All right. But if you think that you want to short, you want to go, you think that you'll drop even further, you could use the 3 times NVIDIA DLC NVDW. All right. So that's on an intraday basis. All right. If you want to do an intraday trade, fine. You can buy now. You can sell before the SGX market close at 5 p.m. All right, for an intraday trade. But if you hold it for overnight, all right, you can hold it for a few days or overnight for the next day. But please note that you cannot trade the DLCs during the US market hours. All right. Your last chance to sell the DLC now, if you buy it now, your last chance to sell it is before 4:59 p.m. Singapore time. Otherwise, you have to wait for the next day Singapore market open for you to be able to buy the DLC, to sell the DLC. But if you hold it overnight, you still continue to gain exposure, maintain the exposure to NVIDIA share price. All right. So if NVIDIA share price overnight rebounds, it rebounds by 3% or 4%, you will get that 3 times performance as well. All right. The NVDI and NVDW will continue to track that overnight US market performance of the NVIDIA shares. All right. Just that you cannot trade it during the US market hours. And then the next morning, it will reflect that overnight US market performance in our bid and ask prices for you to buy and sell after that. All right. So take note of that. You cannot trade it during US market hours. If you're looking for an intraday trade, buy now and sell before 4:59 p.m. That's fine as well. But if you want to hold it overnight, just got to be comfortable with the fact that you cannot manage your position tonight during the US market hours. You can only manage your position the next day when the SGX market opens. All right. So NVIDIA has been quite exciting. You can look at our the NVIDIA share price, NVIDIA stocks over here. You can look for the list of one. You can look for NVIDIA, and this will be your 4 NVIDIA DLCs over here: 3 times long, 3 times short in both Singapore dollar and US dollar currency. All right. Okay, that's all I have for the NVIDIA one. It is really quite an opportunity now. NVIDIA is down -4%, -5%. So depending on your view, there could be a move coming. All right.
All right. Thank you so much, Marcus. I think Marcus has really done a very good job in sharing with us, all right, about NVIDIA, not just NVIDIA, but also Tesla, all right, the DLC. And as I mentioned just now, right, for NVIDIA, we could be seeing some pretty good support around 130, all right. So now, yeah, indeed, we are seeing a bit of selling pressure based on the DLC. You can see it's about 21% sell down, all right. If you're taking a long position, of course, the price goes down. Then that's not good if you take a long DLC position, right? But if you want to take a short DLC position and the price goes down, that is where your gains will be magnified, right? That's where you make money as the price goes down. So I think one thing about DLC is that not just about long, but if you take a short position as well, all right? And I think we have some questions coming back. Maybe guys, if you have any questions, right? Any questions on DLC, you type in the chat. Maybe I can just answer one of them. Like, Poon, right? Can the 1GT Pro track on DLC? Well, basically the 1GT Pro indicator, right? You're able to get an opinion in seconds on any single stocks, asset classes, whether it's crypto, forex, and stuff. But it doesn't cover the DLC, all right? Because that is not the underlying stock, all right? It covers the underlying stock itself. So if you're, whether it's NVIDIA or Apple or Microsoft or DBS, yeah, that is what we cover, right? But we can't actually have the 1GT Pro indicator in terms of covering the DLC. So I hope that answers your question, Poon. All right. So if you can have a quick opinion, I mean, in terms of like understanding the underlying stock, I think that is key, right? Because when you're looking at any asset classes or any other stocks as well, all right, whether is it like DLCs or whether is it like warrants or is it options, ultimately it's back to square one, right? You still need to understand the underlying stock, whether it's going up or going down. You need a position on the underlying before you can even take a position on whether it's DLC or not, right? Because if you don't even understand that and then you do a position on DLC, well, that could be very risky as well. So mainly first go back to the underlying stock, because that's where pretty much all these products, is all all referring back to the main underlying stock. All right.
Yeah. Okay. Good. If I may add on, so it's just important to note that the DLCs are all derivative instruments, so it tracks the underlying assets performance with that 3 times performance. So when you do your technical analysis, you do your charting, you draw your lines, you draw your technical indicators. Please don't do them on the DLCs. All right, it will not work. It doesn't mean anything. Right? You should be looking at the underlying technical analysis. All right, you on the 1GT or your technical analysis, you do your charting, you do your indicators, etc. And if you think there's a buy opportunity, then you look at the DLCs. Okay, so if you think you want to buy NVIDIA at 135.98, 135.98, which is the current price right now, around there, then you can go and buy the DLC at $5.64 right now. And if indeed NVIDIA throughout the next few hours rise by like 2%, all right, then you will see that your DLC will rise by, your 3 times long DLC will rise by 6%, times 3 of that. And so you're from $5.64, it'll go up to, $5.90, $5.80, based on that 6% gain. All right, then you can sell back to us and to lock in your profit. So that's how it works. So please do not do any technical analysis on the DLC charts. It doesn't make sense. You should be doing a technical analysis on the underlying charts. All right.
Thank you so much, Marcus, for sharing that. Yeah, indeed, guys. I mean, yeah, normally when we do our technical analysis, right, it's always on the underlying stock, not on that derivative product, right? Because it just doesn't make sense, right? Because ultimately, the derivative product will follow the underlying, right? So if you are doing the TA or the technical analysis on the underlying, I think that will offer a much better picture before you even buy the derivative. All right. Yeah. So any questions, guys, on DLC, go to type in the chat, or maybe Marcus, we have more time. Do we want to cover like maybe just one more of the, one more top M7 stock that I can share if you're okay?
Go ahead. Yeah, sure. I mean, we have all the Max 7 stocks, so please go ahead. Yeah, we can do that.
Yeah. So we plan to just cover like 2 today, but I think since you guys, one, I think some of you are typing on like Google as well. Glen Hin, right? Google, I think GOOGL. So maybe I could cover that stock as well. All right. And that's where Marcus will come back and share with you guys again on DLC. So why not let me just go to do it, right? I'll just cover one more stock. And when I'm doing that, guys, as I say, right, any questions on DLC, go ahead to type in the chat, right? Because you have an expert right here. We seldom have Marcus over here. All right. So make sure you type in the chat. Any question on DLC, advanced beginner question, right? No problem. All right. Type in the chat and Marcus will go ahead to answer them. All right. I think we have one more question coming out. Let's see, right? When you buy long and the underlying stock drops, what happened? Maybe Marcus, you want to go ahead to take these questions before I cover one more stock? Go ahead, Marcus.
Yeah, so if your gains are magnified, but your losses are also magnified, right? So make sure you understand if you got the direction wrong, all right? You buy the 3 times long DLC and the underlying falls and goes against your direction, your gains, your losses are also magnified, all right? So if the underlying is down by 1%, all right, on a close-to-close basis, and you bought the 3 times long DLC, right? The 3 times long DLC will be down 3%, right? Times 3 of that will be down 3% on a close-to-close basis as well. So that is how it works, all right? But if you bought the 3 times short DLC instead, you'll be up 3%, all right? Because the underlying stock dropped. So your losses are also magnified. So please take note, you have to position size accordingly. Yeah. All right, losses are magnified. So if you're if you intend to buy $9,000 worth of Tesla shares, for example, but you decide to use the Tesla DLC instead, to gain exposure to $9,000 worth of Tesla shares, you will buy only $3,000 worth of the Tesla DLCs, divide by 3. All right. So think of it, your exposure. If I buy $3,000 worth of the DLC, I'm actually having $9,000 exposure to Tesla. And am I comfortable with the swings? All right. If Tesla moves 3-4%, and that $9,000, the amount of fluctuations, am I comfortable with that? That's how you position size accordingly with the DLC. Always take note that it's 3 times exposure. All right.
Very good question. I think if I can add on that as well. So I think what Marcus says is very important, like, position sizing. So of course, this is a leverage kind of product, all right? So if you are looking to buy, like what Marcus said, like $9,000, right? On the real underlying stock of Tesla, right? But if you do on DLC, all right, 9 divided by 3, you can use a smaller amount of capital, in fact, all right? Just $3,000, and you could actually write the same gains as if you were to buy the underlying. Does it make sense? All right. So I think that's one thing very powerful. All right. So in terms of like long or short, right? Of course, if you want the stock to move up, you buy the long. If you think that the stock will move down, you buy the short as well. All right. So there's no this leverage will happen both long and short. All right. So of course, if it goes against you, then your losses will be multiplied by 3 times as well. All right. Anything to add, Marcus, before we move on to the next question?
I think but just one last thing. I think it's just too important to note. Okay, it's a good thing, but of course not a great thing. All right, that your losses are kept. All right, so it's just important to understand 3 times leverage, right? So if you bought the 3 times long DLC, and let's say, for example, the underlying goes crazy, it goes down by 40%. All right, 40% down times by 3 is 120% loss. All right, but you will not lose 120%. All right, the maximum you can lose is 100% only. All right, 100% is no joke still. All right, 100% loss is still no joke. But at least you will not lose more than your invested capital. All right, you will never lose more than your 100% capital. All right, the other 20% is for Socgen to manage that risk. If the underlying moves adversely against that DLC, 120% loss. The other 20, the excess 20% is for Socgen to manage that risk. All right, because we do go and hedge on the underlying. Whenever we buy the long DLC, we will go and buy the mother share, etc., to hedge our exposure. Sometimes we do use other derivatives to hedge our exposure as well. Could be options, could be other kind of futures. But we need to manage that risk in case of any excess losses as well. All right, but from your perspective, investor perspective, you cannot lose more than your invested capital. This is slightly different from margin products. All right, so whether is it like futures, etc., like a margin product, you could potentially lose more than your invested capital if it goes adversely against you, and you could be owing the broker money as well. But for the DLC, because it's a securitized product listed and traded on SGX, you will never lose more than your invested capital. All right, not more than 100%. But of course, 100% is still a lot, so please be careful.
Yeah, good one to note. Good thing to note. I mean, what Marcus mentioned as well. I mean, let's say you were to buy the DLCs, the most you could lose would be the entire investment amount. I mean, if the price were to drop trimester, I mean, quite a huge amount, right? But if you use like margin products and stuff like that, that's where you could have things like margin call and all that. You don't have it in DLC, right? It's very simple, right? There's no margin call or Marcus calling you up to top up. No, right? There's no such thing.
No,
right? So it's a more, I would say, simplified kind of like product, right? Compared to margin, whereby you're borrowing, if the price goes more, you need top up, margin call, or they could force sell your shares and all that, right? But for DLC, it's pretty much like a stock, right? And then that's how it works. Okay, maybe we can move on to the next question, Marcus. I think we are starting to have some questions coming back already. I think let's move on, right? Louis question is, how liquid is the DLC at the average daily volume?
Okay. This one, a very common, okay, let me start with the facts first. I think we trade about 5 to 10 million Sing dollars a day, all right, on the DLCs, on all our DLCs, right? We have over 200 DLCs. Socgen, we have over 200 DLCs listed on SGX. So all the DLCs combined, we trade about 10 million a day, all right, 5 to 10 million a day. But I think very important here to know is the misconception, all right, on what liquidity is. All right, so we have over 200 DLCs listed on the SGX, and not every single DLC trades every day. All right, for some days, it could be Alibaba, could be the flavor of the day, but Kuaishou DLC or your Tencent DLC, no one wants to trade it for that day. Tencent usually have, all right, but maybe your HSBC DLC, nobody wants to trade it. All right, so but it doesn't mean that there's no liquidity on that Kuaishou DLC or that HSBC DLC, even though there's no traded value. All right, because the liquidity of the DLC is really in the bid and ask prices and the bid and ask volume. All right, because Socgen, as the designated market maker, we are obligated by the exchange to provide liquidity throughout the trading day for investors to buy and sell the DLCs. Okay, even though you might see zero traded value for any of the particular DLC, you must look at the bid and ask volumes. All right, that's where we are quoting, and that's where the liquidity is for you to buy and sell the DLCs. So it doesn't mean that there is no traded value, mean there's no liquidity, because we are providing that liquidity, Socgen, in the bid and ask volumes, bid and ask prices. All right, so that's something that a common misconception that people have. They always look at the traded value only, but they don't look at the bid and ask volumes, bid and ask prices, because that's where the liquidity is. Of course, for the more popular DLCs, people who trade it a lot, you will see a big turnover or big traded value on that DLC. It could be 1, 2 million on that DLC itself for that day, especially on the index DLCs. But it doesn't mean that those rest of all my other 199 DLCs, there's no liquidity, because they do have liquidity. There are always liquidity during the SGX market hours. We have to quote, all right, on these DLCs, as long as the underlying market is open and the underlying stock or underlying index is moving, we will provide that bid and ask prices and bid and ask volume. For the US stock DLCs, we are quoting almost $1 million on each side. So in terms of the size, I'm sure many of you who follow Joey are all rich by now and holding very deep pockets. But I hope that $1 million on each side is enough for you, all right, for you to buy and sell the US stock DLCs. But not enough, don't worry. You buy 1 million, we will top up again. We will refill it with another $1 million. So buy as much as you want.
Very good. Thanks, Marcus. I think that's a very good question as well. I think most people are worried about liquidity, whether when you're buying, are you able to sell it? Right? Is there liquidity? Is there buyers there for you to sell and all that? right? So I think very good question, right? I'm glad that Marcus has answered that. Okay, so I think we are starting to have quite a bit of questions coming. Why not let's just go to Q&A right now? Of course, you have a little bit more time, all right? We're trying to end by maybe about 12 p.m. If you have a bit more time, maybe I can share with you guys just one more stock and on how you can take a position on DLC, one of the other M7 stock, right? But I think another question I saw, pretty good question as well, very good question. I think Poon, you are asking if can we then hold for short term or and wait for it to go back up again? For example, you bought a DLC, the price goes down, maybe you lose a little bit of money in terms of the leverage. Can you hold on to it? All right? Can you hold on and wait for it to go back up? All right, and then potentially make the gains again. Marcus, what do you think?
This one it's a bit hard to say. But I think that yes, you can hold it for the short term. All right. So main point here is that the DLCs are short term in nature. All right. So please do not look at buying this for and holding it for a few months or even a year. All right. This is not that kind of instrument. If you want to hold it for a year, I would say just go and buy the stock itself. Don't buy the DLCs. All right. But if you're looking for a short term trade, yes, you can hold it for the short term, a few days, a few weeks, possibly 1 or 2 months. That's possible. And wait for it to go up. But always set your stop loss. Okay, know where, be disciplined, and know when to cut loss. All right. If the underlying keeps going down against you or keeps moving against you, you need to be careful of the compounding effect as well, because your gains and your losses are locked in every day because of the compounding effect. So the more it goes down, the harder is it for the DLC to climb back up again as well. All right. So you must be careful of that. Same as the stock also, there's always a saying, for a stock that is down 50% to go back to where it was, it has to go up by 100%. All right. So that is always the case, and it's even more enhanced or more amplified in the DLCs because of the 3 times leverage. All right. So always know where your threshold is and know where your cut loss is, and not hold on to false hope. All right. So for the DLCs, please take note of that, of the compounding, and also take note that it's a short-term trading instrument. All right.
Yeah, if I can add on a little bit, right? So I think most people, when you buy any stock, whether is it the US or Singapore stock, right? I think most people, if it goes down a little bit of short term, right? Then most people think, never mind, you'll go back up. Let's just hold on a while. Let's hope, and tomorrow will be better, right? And they'll hold on to it. So I think for DLCs especially, of course, you're doing that on the underlying. If the underlying stock is good, that's fine. But if you're doing that for DLC, guys, just take note, because you are, time is against you, right? It's not meant for you to just buy and then hope that in 6 months or 1 year time, that's not the correct mentality to have, right? Because this is more of a short-term trading instrument. All right, it may go up again, yes, all right, but it may go down more as well, and it could wipe out your entire capital, especially if the stock continues to fall as well. So I think it's like what Marcus said, always good to have plan, all right, practice proper risk management. That's what we share all our graduates and mentees as well. Of course, there's a proper way to do it, all right? Attend one of those free webinars to learn a bit more, but essentially this is not a product whereby you just buy and keep it there and leave it there and then think that you hold it like all the way and then, no, that's not how it works, all right? Okay, good. I think we have a few more questions. Jackson, right, thank you so much. The stock price quoted is the stock price, and how big is the lot size?
No. Okay, Should I take this, Joey?
Yeah, go ahead, Jackson. Go ahead.
Okay.
I think Marcus, go ahead. I think this one is talking about the price of the DLC, lah.
The DLC, right? Yeah.
Right.
So you see the DLCs, they're quoted, right? Like their price up ranges, right? Like you saw $6 just now. You saw $8. You saw $10, etc. All right. So this is not the stock price. All right. This is the DLC price itself. All right. And I mentioned just now also Tesla 3 times long DLC. We mentioned just now we started at $5 only, Sing dollars, and it went up to as high as $27 around there. All right. So this is the DLC price. And the DLC price, we will start off as a very arbitrary number at the start first. $5 was what we started off, all right, on the US stock DLCs. $5, it started at $5, and then every day it will track the underlying stock performance with that 3 times performance, all right? So you can see over here the US YW, the Alpha, the Google 3 times long DLC, right? $6.67, all right? So if today, for example, on the US close, it closed at $6.67, and then the next day, Google gained by 3%, all right? Google gained by 3%, and so times 3 times leverage is 9%. So this $6.67 will rise to 9%. You'll gain 9%, all right? You gain up 9%. And then the next day, you'll carry on, so on and so forth. Every day, you will track the underlying stock's performance with that 3 times performance using the previous day's close as the reference price, all right? So that's the same as your TQQQ or SQQQ, all right? Now your SQQQ or your TQQQ, they're trading around $30 US dollars. Every day it just tracks with that 3 times performance, and that price is the DLC price, all right? So this is the DLC price, that's the instrument price. It's different from the underlying stock price itself.
So you can see that the underlying price and the DLC price is totally different. Just to be clear, guys, it's totally different thing. All right. Of course, the DLC tracks the underlying, but if you just look at Alphabet, right, Google, right, you can see the price is about $200 over. But if you're looking at the DLC for Google, all right, in Alphabet, all right, it's about $6 over only, right? So 200 is one, $6 plus is one. Totally different, right? That's pretty much the thing. And then I think, Jackson, your question would be like, how big is the lot size if you to trade the DLC? So DLC is just like any other normal Singapore stock, all right? So the lot size would be 100 shares, 200 shares, 300, 400, 1,000, 1,002. I mean, it's in 100 shares, right? So that's how, it's just like any other normal Singapore stock. So I hope, Jackson, that answers your question. Marcus, anything to add for Jackson?
Correct. So we just actually enhanced our website just like last Friday. So it's just super timely.
Nice.
But you can see over here on the chart, USYW, the price, you can see the price over here. We switch to price. And you can see how the underlying, how the DLC price will track the underlying stock price. All right. Start off at $5. I mentioned that we issued this on $5. All right. And then this was listed on the 9th of December last year. Started out at $5, the one in red over there. Google share price was 175, and then it tracks every day. All right, it tracks every day with that 3 times performance, and then now we are at $6.90 over here. Okay.
Marcus, could you do me a favor? I mean, there's this price. I think now we can see that the price is tracking the underlying, but there's a percentage change box.
Yes.
You just okay, maybe you can explain a little bit. I think that's something interesting.
Yes, so you can look at the price. So you can compare the DLC price versus the underlying share price across time. How does it move? All right. But you can also see in terms of percentage change. All right. In terms of the 6-month performance, how has this DLC performed versus the underlying? All right. It's been quite a sideways market for Google. Not much change. All right. So it's been largely around there where you get around that percentage change. All right. About the 3 times performance. All right. So over here, you can see that, the Google is up by 14%. Then this DLC is up by about 39%.
Nice. So clearly, guys, you can see that in terms of the red and black line, I mean, the red one is above because, it's 3 times the percentage, right? So you can see it's pretty much following the underlying returns. Okay. Very good. All right. I think let's move on to the next question. I think we have quite a few questions coming out already. I think JH has a question, right? Can we buy long and short at the same time? Wow. Can I set a price level to buy or sell? Marcus, go ahead.
I get this question quite a lot, actually.
Yeah.
Those people who are more sophisticated traders out there, they always say, is there an arbitrage opportunity or is there like a spread that I can earn? Well, I would say, generally I would say you can try, but that it's not going to be easy. All right. We do price this quite tightly. All right. So you can buy the long and the short at the same time, but you might not be able to make money in the end. So just be careful on that. All right. There might not be much spread for you to earn in terms of that, especially on the short. There's a borrowing cost as well overnight. So it might be a bit of a borrowing cost in there as well, because on the short, when you go short, we have to go and borrow the shares and to hedge our position and fund that position to borrow shares. So there's a borrowing cost involved overnight as well. All right, so it's a bit of difference in terms of the fees. So it might not be perfectly aligned if you buy the short, long, and short to earn a spread. Okay, can I set price level to buy or sell? You can, but I would say do this intraday. All right, do it intraday. You look at the price, all right, and you think that, okay, if you want to wait for NVDA to drop by another 1% down, all right, then you look at the DLC price now, you minus off 3% from that, and then you can set your buy order there as well, from there. But look at it intraday, and you should refresh that every day on a daily basis to look at where is underlying down. Okay, this is where the DLC price will be, and so I set my order there. Okay. We are working on some form of like a price matrix thing for the US stock. For the Hong Kong, Singapore stock DLCs, Hong Kong, Singapore indices DLCs, we do have a price matrix as well for you to refer. But for the US stock DLCs, we are still working on that right now. Will come out soon, and hopefully that will also be a good reference price for you to see which price level corresponding to where the underlying stock is for you to buy and sell the DLCs. Okay.
All right, very good. That question, all right? So let's move to the next question, all right? I think we have Louis again. Is DLC market open during Chinese New Year period?
We are unfortunately we cannot open when the SGX market is closed. All right. But the good thing is that we're open on Friday, even though Hong Kong might be on a holiday on the third day of Chinese New Year. But Singapore market is open, so the DLCs will be open for trading on the Friday, on the third day of the Chinese New Year. All right. Okay. But CNY first day, 2 days we are closed.
Yeah. So guys, basically the DLCs, right, is listed on the SGX, the normal Singapore Stock Exchange, right? So if the Singapore stocks are trading, then DLCs will be trading. If your DBS is trading, then DLCs are trading, right? So we're not open. I think tomorrow will be half day. Tomorrow is Chinese New Year Eve, right? So so half day. So tomorrow, I think Wednesday, Thursday close.
Yes.
Right. Okay, good. Need to register on DLC platform before trading or not, Jackson?
No. So this one, a common question as well. To everyone ask, do I need to open an account with Socgen or no such thing? All right. You trade this the same way that you trade your DBS shares or UB shares. You go into any stock brokerage account. All right. You go into any regular stock brokerage account, including Philip Poem's trading platform. You go inside there and you buy and sell the DLCs the same way that you buy your DBS shares or UB shares. All right. You don't need to open any separate account with Socgen. As long as you have a brokerage trading account that offers you Singapore shares trading, you should be able to find the DLCs there and trade the DLCs there on your brokerage trading platform. Right? You come to Socgen website, you find out which DLC you like, look at the price, look at our Socgen B&US prices, you learn more about the DLCs, but you ultimately go into your brokerage trading platform to trade. All right. So any regular stock brokerage account in Singapore, you can trade the DLCs over there.
Okay. Yep. Very good question. I think most people get a bit confused. Like, what is Socgen? Is Socgen a broker? Is it a trading account and stuff?
Yes.
So guys, Socgen is an issuer, the DLC, all right? They are not a broker and stuff. So you can buy this. As I say, this is listed on the SGX. So any broking trading account, that's where you could, find the code, the name, all right, of the DLC and trade it just like your DBS, any other normal Singapore stocks. All right, Ken? So you do have to go and register. But what happens for DLCs? If I can share with you guys a quick note as well. DLCs, this is what we call a little bit of like specified investment product. So you need to actually fill up online the CKA form, client knowledge assessment form, just to understand, the risk and all that stuff, all right, before you can actually trade, right? So just a bit of on how you can do it. Of course, please approach your broker. Of course, if you have an account under me in Flip Securities, where I'm a broker, you send you all the details, all right, to get it settled and stuff, so not to worry. All right. Okay, so I hope that answers your question. Peter, I think a very good question as well. I think we talk about like cut loss and you want to manage the risk and all that. Marcus, maybe you can share a little bit more like how to cut loss and.
Yeah, I mean, basically, you should look at it from a underlying perspective, right? On where you want to cut loss. Okay, you don't look at the DLC per se. You look at the underlying first. All right. So you look at the underlying as to where do you think you want to cut loss. All right, on the underlying chart itself, if it drops below a certain price, NVDA share price drops below a certain price, you want to cut loss. Then you look at the DLC as well. All right. So if from where your purchase price is to where the cut loss is, you look at the percentage change over there, and then you can look at the DLC times by 3, divide by 3, the percentage down. You can cut loss on that level as well. But your cut loss determination should be based on the underlying stock itself. All right. Look at where you want to cut loss on the underlying stock. All right. And then that translates into where you want to cut loss on the DLC. But that's one perspective, right? On a more objective or how you want where you want to cut loss, because maybe you can have different cut loss strategy. All right. You cut loss depending on maybe the underlying broke the support, for example. All right. And you think that at this level I want to cut loss. Okay, that's fine as well. But if you want to have a cut loss in terms of absolute amount, all right, I can only stomach $500 loss or like $1,000 loss. Then you can look at the DLC price itself, right? If you bought it at $10, for example, and you're only willing to lose, say 10%, right? You bought it at $10, but you're only willing to lose 10%. You can set your stop loss at $9. All right, you can set it at $9 cut loss, and you can set that order in to stop loss at $9 as well, if you want an absolute sort of cut loss. Okay.
All right, very good question. I think let's move on. Thank you so much, Peter. All right, Poon, what is the address this DLC? I think you're referring to the website address that Marcus is showing, is it? No worries, I've just placed it in the chat already. I placed it in the chat, so go and check it out, guys.
Thanks, Joey.
dlc.socgen.com.
Yeah.
All right, so click on it, and then that's where you can go to the website that Marcus is showing just now as well. All right, okay, let's take a look at another question. Prebo. Let's see. Hi, Joey. We already have CFD. True. All right, providing leverage. I think it's a common question Marcus get. Can you please suggest whether DLC is better, alternative to CFD, if we just want to trade this price movement? Marcus, maybe you share first before I share. Go ahead.
Yeah, I get this question a lot as well. CFDs have been around in Singapore for a long time. DLCs for about 8 years right now. All right, so both are leverage trading instruments. All right, both are leverage trading instruments that you can use. So I would say that it's really about preference. All right, personal preference. There is a product for everyone. All right, for those of you who are very used to the CFDs already, it could be something that you prefer. All right, but those of you who want an exchange traded instrument on the SGX, then you could choose the DLCs as well. But both products, all they are leverage trading instruments, there are some very key differences that you have to take note of. All right, so like I mentioned just now, the DLCs are not margin products. All right, so it's not like a CFD in terms of margin. All right, you don't get your leverage from the margin that you put in. All right, the leverage is embedded into the performance of the price performance of the DLC itself. So the DLCs are not margin product, which means that you also will not get a margin call. All right, so if the underlying moves adversely against you, you get a 3 times leverage instrument, underlying moves 40% against you, that's a 120% loss. All right, on the CFD space, you could face a margin call. You will likely face a margin call to top up the extra 20% or even more to maintain your position. All right, or even be liquidated straight away and owe the broker money on the CFDs, for example. But for the DLCs, you cannot lose more than 100%. You will not get a margin call. Right, the max you will lose is 100% only. And you will not end up losing more than your invested capital because it's not a margin product. All right, so another downside risk, that's what I see as the benefit of DLCs versus CFDs from a downside risk perspective. All right, but the DLCs also have something that is different from the CFDs, where the DLCs have a compounding effect feature. All right, so the compounding effect feature I mentioned just now, it can work for you in a nice trending market. You can get more than a 3 times performance, but it can work against you in a volatile or sideways market. All right, underlying moves up, moves down, moves up, moves down, up, down, up, down, down, all day come back to the same spot again. The DLC could be actually sitting on some losses. Well, for the CFDs, there's no such thing as compounding effect. Yep. All right, so if it goes up now and come back to the same level, the CFDs should be around the same level. All right, so the CFDs do not have compounding effect like the DLCs, so you have to take note of that. And that's up to you, your personal preference. If you want the extra kicker on the compounding effect, you could choose the DLC. But if you don't really like the compounding effect feature, you then could choose the CFDs as well. All right, so there is pros and cons to each of them. And ultimately, they are different instruments and they're also on different platforms. All right, so CFDs are on the OTC platform, so it's over the counter kind. You have to open a separate CFD account with your CFD broker. All right, but the DLCs are exchange traded instruments. It's listed on the SGX, so you can trade it on any regular stock brokerage account, the same account that you use to trade your DBS shares or UOB shares. You can trade the DLCs as well. All right, so these are a bit of the differences. If you want a bit more of an in-depth comparison into it onto DLCs versus other kind of instruments, please feel free to give our hotline a call, 622-62828. I'm happy to share with you a bit more details about the DLCs versus other kind of leverage instruments, because that's really a common question that I have as well.
Same, that's a common question that we have as well. So thank you so much, Marcus. In fact, that's everything that I want to say as well. So if I can just add on a little bit, I would say that for CFD, I mean, actually, my forte is mainly on CFD and stocks, right? But of course, we do have DLCs as well. Many of our clients are doing it as well, all right? And I would say one of the key difference would be like what Marcus has mentioned regarding margin call or margin call. So for CFD, maybe it might be a little bit simple to understand, such that the underlying stock price is the same, right? Like let's say we talk about Alphabet, Google, right? It's $200, and the price for the DLC is about $6 plus. So people might it might be a little bit of a different, but for CFD, well, some of our clients like it such that the price is the same. All right, of course, in terms of the margin, the initial margin factor, the amount of cash you need to open that CFD position depends, but the price is the same as the underlying stock. So completely different product, all right? Completely different mechanism as well, right? So I think you can, choose the platform that suits you, that you feel you are comfortable with. You are better able to manage the risk. You are better able to understand the numbers as well. All right. So I think that is the difference. All right.
One last thing that I'd like to share. Maybe just to be a bit biased over here, why you should consider the DLCs, especially for the Magnificent 7 stocks. All right. You should consider the DLCs because of the Asian hour exposure, especially in times when you want the Asian hour exposure, right? So CFDs don't have that Asian hour exposure for the US stocks right now, all right? So if you want to get into Tesla now or get into NVDA now at 11:57 a.m. Singapore time right now, the CFDs will not offer you that exposure to the US stocks during Asian hours, all right? But the DLCs right now, we do offer you that exposure during Asian hours, 3 times long, 3 times short exposure during Asian hours. So if you are looking at Asian, getting early ahead of the US market open, definitely the DLCs is your only choice. So you can consider the DLCs if you are looking for this kind of Asian hour exposure or getting in early ahead of the US market open. All right.
Okay, very good. Let's move on to the next question. Lui. All right, a lot of questions by Lui today. Thank you so much, Lui, for asking. All right, what is meant by the compounding effect on the DLC trade? Marcus. Yours.
Yeah, maybe I can quickly just share my screen over here so it's a bit easier to explain it with an illustration. All right. So if you go into our education tab over here at the top, education tab on the website, you should be able to go to compounding effect. All right. So you can see a write-up over here on compounding effect. But the main thing is that the compounding effect is where you get that fixed leverage every day. All right. Every day on a coast-to-coast basis, you get that 3 times, 5 times, or 7 times performance on the underlying assets daily percentage performance on a close-to-close basis. And that is the basis of the compounding, because every day your gains and losses are locked in. All right. So this compounding effect can work for you in a nice trending market. All right. So this, for example, over here, the Hang Seng Index is up 2%, 2%, 2% for 3 consecutive days. And so that's up by 6% cumulatively over the 3-day period. My 5 times long Hang Seng DLC, right? My 5 times long Hang Seng Index DLC is up every day, 5 times performance. So every day up 10%, 10%, 10% to give you a cumulative gain of 33.2%. So 6% times by 5 is only 30%, but my DLC gives me 33%. All right. The extra 3% is due to the compounding effect. All right. Every day my gains are locked in. And so my 10% on day 2 is based off a higher base. My 10% on day 3 is based off a higher base of $3.03. So every day your gains are compounded, and that gives you that more than that 5 times performance. All right. So that's where the DLCs can work super well for you in a nice trending market, the compounding effect. But in a volatile or sideways market, like over here on this chart over here, where Hang Seng Index is down 3% on day 1, down 4% on day 2, but up 9% on day 3. Cumulatively is up 1.5%. All right. But my 5 times long DLC, every day you get that 5 times performance. So minus 15% on day 1, minus 20% on day 2, and up 45% on day 3. Every day that 5 times performance, but cumulatively is down minus 1.2% because of the compounding effect, where your losses on day 1 and day 2 are locked in already. All right. So that is the compounding effect. It can work well for you in a nice trending market, but it can work against you in a volatile or sideways market.
Okay, very good. I think that clearly explained the question already, right? Thank you so much. So I think we have almost come to the end of this live show called the M7 US Stocks DLC, all right? Guys, okay, maybe if you can, I mean, some of you are asking about like Alphabet just now, right? So maybe let me just do a very quick coverage on Alphabet, all right? Then maybe Marcus can just go on and show the Alphabet, DLCs that you could take a position on, because actually Alphabet was also one of the stocks in my watch list. So you can see for Alphabet, right, very quickly, couple of bullish signals since like March last year. Look at these guys. We had a bullish signal for my 1GT Pro indicator in March. Another one. There we go, all the way up. Of course, if you have used DLC, then your gains will have been magnified as well. Bearish signals coming out in July. Pump. There we go. Down, down, down. Pushing back up again with bullish signals. And let me just bring your attention, right, to the most recent bullish signal that came out actually in December. You can see December, we were actually trading for Alphabet, right? GOOGL. All right, okay, let me just put in the chat as well. So this stock is GOOGL, all right, over here. All right, and we have actually, broke above the 180 resistance level that we were trading below since November, October, all the while last year. So we broke above the 180. We got a bullish signal coming out. You can see, right? And the green 20 days moving average line was flat, started to point up. All right, so definitely right now, guys, the most recent one is a bullish signal. Of course, it's gone up a little bit already, but the short-term trend has turned from up to sideways to back up again. And right now, you can see that prices are still above the 20 days moving average. So you want to take this very key level into consideration. I think this is a very key resistance level. If I can draw it for you, this is the 200 psychological resistance. Look at this, right? Over the past 1 month, right? We have seen a couple of bearish candles right here. You can see a long upper shadow. We came down, another bearish candle came down. In fact, last week, a bearish candle, we came down a little bit. So I think 200 is a very key psychological resistance level, right? But if we can break above the 200, right? If you go to like, 202 or 203 or 204 or 205 or something, right? I think that is potentially where we may have a new bullish signal coming out, right? And that is where we could see even more upside. Targets could be revised, right? From here, let's say from 180 to 200. That is the range right now, right? We could see targets being revised maybe all the way to $220. And that simply will be about a 9 to 10% kind of upside just by buying the underlying, all right? If that happens, if you take a more aggressive kind of entry on a break above 200, a 9%, 10% upside based on $220 as the target, right? Of course, I'll leave that to Marcus, right? If you actually take a position on the DLC, then it's different, right? It will not be down to 10%, all right? It could be more, 3 times more. It could be, 25 to 30%, right? Depending on how fast it goes up there, all right? So now that I've shared on Alphabet, right? This code, Alphabet, GOOGL, take note of this level, right? 200 is a very key resistance. I'll just let Marcus just come back and share a bit more, just a very quick one on the Alphabet DLC, all right? Marcus, take it away.
Okay, all right. So I can share my screen. So yes, so this is the Alphabet long DLC, right? Denominated in Sing dollars. So USJW is the stock code. This is the 3 times long Google. So Alphabet is the parent company of Google. So this is the one. Google, 3 times long DLC USJW. So you're right, Joey. Right now it's like actually right now during Asian hours, it is already down almost 1.8% from its close last Friday. So $200 is the key level, right? And it closed CC at $200.21 last Friday, all right, sitting at that pivotal level. But right now during Asian hours, it's already coming back down. All right, it's already trading at $197.67 during Asian hours, and we have priced it accordingly. All right, so it's trading now around $6.51 on the 3 times long DLC, $3.51, $3.52, and the 3 times short Google DLC is at $1.95, $1.945. Now it's just market hours lunch break, so there's no quoting of this, no trading of this DLC. Come back at 1 o'clock. All right, but you can choose either the long DLC or the short DLC now. If you think that 197 is already confirmation for you for this pullback from this resistance or this pivotal level of $200, you can choose the short DLC to short down back to 180 even. But if you think that it's going to break above, it's an opportunity for you to, so it's going to reverse back up above $200 in the coming day or two. You could use the long DLC as well, and you can buy it at $6.85 later at 1 p.m. when market opens again. All right, ahead of the US market open. All right, so basically that's that, and you can see that it will move in line with the underlying stock over time. All right, so that's where you get a 3 times performance every day on the close-to-close basis. You get 3 times the performance of Google on the DLC, whether it's a long DLC or a short DLC. Okay, that's all.
Okay, good. So that's it, guys. Thank you so much. I think we have come to the end of today's M7 Magnificent 7 US stocks DLC session with Marcus. All right, so thank you so much. All right, and as I say, if you guys want to learn a little bit more in terms of the one good trend strategy, right, how you can have an opinion on any stocks in seconds using my one good trend pro indicator as well, attend one of those free webinars, right? Attend one of those free webinars will share with you guys a bit more, all right, a bit more on the strategy and how it works, how do you actually make gains of 5-10%. Of course, now you have this knowledge on DLC that can help you magnify that as well. All right, so attend one of those free webinars. Right, so yeah, I think that's it, guys. Very glad to have Marcus over here as well. If you guys got some value, or those of you who are still over here, you got some value in today's session, just type a V, guys. Type a V for value. All right, just type thank you so we can acknowledge all of you for just being here as well. Poon, thank you very much as well. Awesome. Right, just type V for value, guys. If you have got value so far Thank you so much, Chi Sing. Thanks, Joey and Marcus. So very glad to have Marcus here, right? So I think all of you, even I've learned something today on DLC, right? Something a bit, that I think all of you have gained value as well. All right. So Dave, high value, Buxon, value. Awesome. Thank you so much. All right. So I think Marcus, thank you so much. Any last words to say, Marcus, before we close today's session and then we celebrate our Chinese New Year?
Happy Chinese New Year to everyone. So thank you very much for having me here, Joey. I'm glad to be able to share about this exciting product that we have on the SGX, the US Magnificent 7 Stock DLCs. It's fresh out of the oven and it's really quite an interesting product, especially during Asian hour. You see big news during Asian hour exposure to the US stocks. It's a rising trend. So please do check it out. Our website, dlc.socgen.com. Please check it out, our website. You should read up a bit more first before you trade the DLCs. Although I know markets are hot right now, right? It's getting volatile. There could be opportunities, but make sure that you read up a bit more about DLCs first, understand it before you trade it. And also, any questions at all, please give us a call. 6226-2828, our hotline. My team and I will on standby during SGX market hours to answer any questions or any feedback that you have on the DLCs. Please don't hesitate to give us a call. All right, we are one phone call away from your first DLC trade. All right.
Okay, thank you so much. So bye everyone. All right, wishing all of you a happy Chinese New Year. All right,
新年快乐 everyone.
Yeah, 恭喜发财 and 新年快乐，身体健康。Okay, bye bye. Take care. Hopefully we have Marcus. I think Marcus we have maybe one more session coming up again. So not to worry, guys. You can watch the replay if you miss any parts that Marcus has shared. But we will have Marcus coming back again. All right, maybe the next few weeks we'll try to plan something out. All right, and that's when Marcus will come back. And of course, we'll try to cover maybe another M7 stock to see what we can do with that position as well.
The earnings are coming out for the Max 7 stocks towards the end of the month, this month. Nice. So we'll come back again after the earnings and then see where the stock prices are after that. All right.
That'll be good. That will be good. Yeah, definitely. Okay, so happy New Year, everyone. Take care. Have a good Chinese New Year. Bye. Happy New Year. Thanks, Jackson. Happy New Year to both of you as well. Thank you so much. Bye, everyone. Take care. Bye-bye.